time, what perhaps is a lunch hour for many of you. I lead CBRE's advisory and transaction services across Asia Pacific, as well as our Agile business globally. In today's presentation, what I'll do is I'll touch upon what I think is the future of the flexible office industry, as well as what real estate agility in general might look like in the post-COVID-19 era. Importantly, we'll also dwell on what this might mean for various stakeholders in this business. I will be drawing upon CBRE's extensive research that we've done on this subject in the past couple of years, and one of them in particular, which I know you and I will circulate after this call. I've broken our discussion into really 3 quick sections. The first one, as I said, we'll be dealing with this with all the stakeholders in mind. How are occupiers and flex operators thinking about their strategies in the post-COVID world? And as a derivative of that, what does that really mean for the future of flex operators in the industry? And lastly, what can our landlords and owners of real estate think of doing to adopt or adapt to this new normal? With that, we'll move to the next slide, please. I think what is really important to see in this slide is, sorry, my screen is hanging, so you guys just give me a moment. I think what's important to see in this slide is the size of the pie. So flexible office space comprises of about 71 million square feet across 18 gateway cities in Asia Pacific. To put this in context, a flex office as a whole of all office stock in APAC is about 4.5%. In Singapore, where I'm based, this number is upwards of 5%, both as a part of grade A and the total office stock. It's safe to say that if we were looking at this statistic 4 or 5 years back, this number was perhaps closer to half of what it is today. Moving on to the next slide, please. From our conversations with operators, it's fair to say that most, if not all, are very acutely aware that as clients come back to work, they'll be looking for a safe place to work from, and therefore have been making efforts and investments in safe distancing as well as other health measures. It's also something that we've noticed that over and above the adherence to local or state requirements, as might be the case in many markets, they've all taken measures around more frequent sanitization, reconfiguring their spaces, to support physical distances, as well as monitoring movement within the spaces. An important part about monitoring the movement within physical spaces is that it's subject to local privacy laws as you go from one market to another, or as we move from country to country. Next slide, please. This again is an important slide. I think in the short term, especially for the owners and the landlords, on this call, it's fair to say that many of the occupiers and operators have come to them for deferrals, fee waivers, or reductions in price. However, our discussions with occupiers suggest that many of them are already focused on a more medium to long-term view on the continued use of flexible office space and the flexible environment that's causing more agility. And some of the reasons that's driving this shift, there's 4 or 5 of them, and I'll just touch upon them, one after the other. The first is, we're expecting that the workforce will be more fluid. So flexible working might become more normal than it is today for most companies and their employees. And as that becomes more acceptable, we just think the need for agility and flexibility of work will become a much more important discussion point. The second is headcount volatility. I think companies will find it even more difficult going forward, at least in the medium term, to be able to predict or project what their headcount will look like. And that again feeds into the ability to contract at short notice or expand at short notice. And again, that's why flexibility will perhaps be more important. The third thing that we are noticing with feedback from our clients is that they're all looking in terms of preservation of capital and therefore CapEx avoidance. And again, anecdotally, many of our clients are interested in agility or flexibility where they don't necessarily have to put in CapEx. As workplace densification takes place, de-densification takes place, which is definitely a trend that many companies are talking about. One of the solutions for larger occupiers seems to be to try and accommodate social distancing protocols in highly dense office environments. And then finally, as they look at risk mitigation, spaces for BCP are evolving with the rotation and splitting of teams. And again, that feeds well into the need for flexibility and agility in their portfolios. I'll now move to the next section, which is how does this all impact the operators? Next slide, please. In this slide, it's fair to say that none of us have a crystal ball. It's very difficult to predict what will happen in the next 6 to 12 months in the sector. However, we do anticipate that there will be perhaps more M&A in this sector, as well as subletting and surrenders of unprofitable centers. And this trend is becoming more so as we see the flex operators in the market are in the midst of focusing on sustainable growth and unit economics. So the unit economics is becoming extremely important for them rather than the larger story of just dots on the map. Operators in better economic state are using these market conditions to double down on their footprint. And finally, sites signed at the top of the market with much higher rent are definitely going to see pressure from members who can migrate to other centers that are being signed now and will be able to offer much better economics. In the graph above, one can see that CBRE expects upwards of 5% of total flexible office space, including the pipeline actually, to be at risk in many of the cities, especially as we see on the left, Hong Kong and Shanghai. Moving on to the next slide. In this slide, this is really a derivative of the previous slide, where we spoke about how there will be more consolidation in this sector. And as you see the charts, in the Q1 of 2020, the consolidation of the international and regional players shows an upwards of 50% market share compared to the previous year. Next slide, please. Can you please move to the next slide? We finally, we'll have to go back to the slide separator, which says impact on landlords. So coming to the impact on landlords, it's important to sort of really look at what is the story for the owners and landlords of real estate as they look at this sector. Moving to the next slide, please. As we go forward, I think the table stakes for landlords will be that they will be a lot more selective around the flexible office operators that they choose to. This is something that we are hearing from our interactions with most of the owners and landlords. Our investors' intentions survey that we conducted in March 2020 suggests that the credit quality of operators, the lease structure, and portion of asset allocation to flex will get a whole lot more attention. You'd recall that CBRE had recommended last year that this asset allocation to flexible space up to about 20% of the entire asset is something that doesn't impact the valuations of the overall asset. And our current survey suggests that that number still holds and is an area that owners think is the sweet spot of not exceeding 20% as the number for flexible space. Next slide, please. This is again an important slide, one that needs some thought. The current model for office tenants is on the left side. You know, a large headquarters with some minimal allocation to satellite offices and project offices. In our view, what is perhaps likely, or something that our tenants are speaking to us more about, is that the future office occupier footprint is going to be a combination of the headquarters with a mesh or network of remote working, on-demand working, short or medium-term flex space, as well as access to amenities. The key metric that occupiers will be measuring on will be productivity rather than clocking in on hours. We've heard this from many clients that their traditional way of working might look very different as people come back from post-COVID. To meet this demand then, we also think it'll become more critical for landlords to operate their assets with an increased focus on hospitality, amenities, shared spaces, and technology. Short and medium-term flex space, as well as turnkey spec suites, will then be a key component of the of the office asset of the future. Let's move to the next slide, please. Finally, we think the model that will evolve as the landlords look at offering flexible space within their office assets are perhaps one of these four. The traditional lease, where the third-party operator keeps the risk and reward, and this has been the one that has proliferated the most in the last cycle. In the last 4 or 5 years, the traditional model has been the most popular. The second is a partnership model, which is typically a JV or some sort of an understanding between the landlord and the operator, where the risk and reward are shared in some manner. The third, where we are seeing a lot of activity in this sector in the market at the moment, is an operating agreement where the landlord keeps the risk and reward and hires a third-party operator on a hotel-like management agreement. And finally, we've also seen the captive model develop in various markets where the landlord designs and builds its own space and offers it to tenants as part of their portfolio. And finally, coming to the last slide of the deck. So in summary, we expect short-term pain for flex space operators. There is no question about the fact that this is a time when they're seeing a lot of pain. And we'll also see an evolution in the customer delivery in this period. Yet in the long term, and in fact, even in the medium term, the fundamentals of the sector remain solid. I would encourage the owners and landlords tuning in to think of creative ways to engage with the flex operators, or indeed with the clients that are looking for agility in their portfolio. Because from all that we're hearing at this point from our clients on the occupier side, the need for agility and flexibility for the end customer, in our opinion, is perhaps going to go up and not down. To end on a lighter note, it goes without saying, CBRE and I are there to help you with these conversations. Thank you very much.
Thank you very much, Manish, and thank you all for joining us. As mentioned, this presentation was recorded, and also the slides will be available on our websites. We hope you enjoy the presentation today, and if you have any additional questions, please feel free to contact us. Have a lovely day. Thank you all.